This was 2001, and I was actually trying to see how can capital convert entrepreneurial ideas into business in rural India. And very quickly I realized just capital won't do. So I actually set up a fund called Avishkar, which is an impact investing fund, as you call it now, and a company called Intellectual Capital, which basically tries to build an entire ecosystem to make sure that the entrepreneur or the idea who receives the capital is finally successful. They don't work together all the time, but essentially the idea was that you need to provide everything that an entrepreneur needs to succeed, specifically in an emerging economy where challenges are too many. But I think 2001 and 2, the idea about inclusive business was still unknown actually. So when people like me used to do, we did not know what we were doing. It's around 2007 and 8, the nomenclature started being attached to what we were doing. I think over the last 4 years period, we have learned quite a lot in terms of where the market is moving. A report that Intellecab did last year clearly signified that you're talking about $1.6 billion that has gone into the impact investing space within India itself. I believe we are actually seeing the early sign of impact investing reaching a certain stage, both in inclusive business and developmental form. But a lot more needs to be done over the next 5 years. And I think one of the key challenges is, which I still believe impact investing is going to face, that while the ecosystem for a startup stage has been built reasonably robust, you do not have impact investors who have the ability to come in at a later stage. So when you are talking about growth scale, impact investing, private equity, institutional capabilities, that doesn't exist. So once the startups cross a certain threshold, they are actually into the market competing with information technology companies and information communication technology and telecom, and attracting investors who know those businesses, trying to give you valuations and investments of the same kind. It may lead to significant burnouts and very high risk, both to the space as well as to the ultimate client for which we all stand for. And I think microfinance went through that challenge, has become much more responsible in India, but the heydays of the growth are not going to be there. Ultimate expectation that everybody should have is that we are not here doing an e-commerce business where scale is unlimited and valuations will keep going up. The most important thing that one has to define when he's talking about inclusive business or impact is he needs to control his greed. Until the time the entrepreneurs, the investors, the new age investors understand this, we would be doing well. If we don't, then we will see another decimation at some stage, sometime. Well, I personally believe that things will not go bad or good. This is actually a general progression. So what you will see is the survival of the fittest, and in this case, survival of the most responsible. The word fittest probably is more suitable when you are just chasing capital returns. But in this case, probably survival of the most responsible will be there. So like we saw in microfinance, in India specifically, we went up to $6 billion, came down to $3 billion, and then have again reached $6 billion in much shorter period of time. I think there will be hiccups, but the journey towards a more progressive, inclusive world or universe is a journey on the path that we are following, and the recent G8 discussions, etc., all clearly indicate that people are coming together around and forming a view, which I believe probably is irreversible, if slow, but irreversible.